Hello, this is Mark from tradingforums.com. Welcome to this video on using Fibonacci extensions in Forex trading. This video follows on from the previous video using Fibonacci levels in Forex trading, and there is an article to accompany this on tradingforums.com. The link to the article is below this video. For those of you who have seen the previous video, you will note that we're looking at exactly the same chart, which is the British pound against the Australian dollar, and the period of time we're looking at is May 2012 to June of 2013. So initially what we did is identify the big swing high here in May of 2012 and looked at this move all the way down to August of 2012 and put on our Fibonacci retracement levels. The first extension that I'm going to look at actually came from this small retracement here against the main trend. We see first of all a strong move, very strong move to the upside, and then this small retracement here, of which the price after approximately 2 or 3 weeks pushed back up and made a new high. You can see that that new high here coincided very nicely with the extension level of 161.8% and also the 78.6% retracement level. If we'd been looking for this level here at the time, we could have made a very nice trade, very nice swing trade to the downside, especially after seeing the strong reaction. Okay then, so the price subsequently moved quite strongly to the downside, took out our swing low here and we made a new swing low, and so by this time we'd made a new lower high and a lower low, and we can consider, or a lower than this low in any case, and we can consider that we may be at this point in a downtrend. The percentages are saying that we are in a downtrend, and this subsequently proved to be correct as we see the price stall out here at what was the 61.8% retracement level. Now once the price had got below this swing low here, what we can do is put on a Fibonacci extension level. I've used a different colour to differentiate them, even though they are really exactly the same. And we can see that first of all, the first level we're looking at is 127.2%, which is taken out with no real reaction that we can see on the daily chart, and we didn't quite reach the 161.8%. Despite the fact that we didn't reach the level here, we can still find some use for this, and as it subsequently turns out, there are some further extensions that were reached at a later point. So again, we have, following on from our new swing low here, we have another lower high here as the price topped out just about or just above the 50% retracement level, and again broke down and made a new low. So what we can do is put another set of retracement, rather extension levels on here. Once we know we've broken below this line, and again we're initially looking at 127.2% and then subsequently 161.8%. We can see here actually the price almost certainly on a Monday or first day of the trading week actually broke below 161.8%, but then the gap quickly closed. We ended up with a strong up day, and the price in fact held quite nicely above this 161.8% level for over a week of trading before making a further and a fresh new low here. Now we can see we've made another new low. Interestingly, this initial one, this previous one rather, actually coincides almost to the pip with the 261.8% retracement level, and is just slightly above the 261.8% level from this set of levels. Okay, well at this point We don't know whether the move has finished or not. We know that we have hit a significant level, which may have increased the chances, but at this point we are still looking for the price to go lower. Our initial swing high here, and we got a retracement below it. This is from the 50% move, meant we could draw our levels here, and we were looking for this price and below this if the price were to make a new low. In fact it didn't. In fact we found support here at the 61.8% retracement level, broke above, and then ever since then we have been making a series of new highs. In fact the price in recent days seems to have gone parabolic, and we've taken out all of our highs previously, and we're back almost right to where we started at the 164 level. Although the price move here is parabolic, it makes it a parabolic move makes it more difficult to identify clear swing highs and swing lows. We do have a small retracement here which we could use. In this case I'm going to use a fairly clear swing high. The swing low, it's fairly small, but I can put this one on here, and again we can see very little reaction here. In fact very little reaction here, which does coincide with the 100% of this move here. Sometimes we won't get a reaction, sometimes the fundamentals are driving the markets too strongly. In fact we can see this gamely attempting to try and act as resistance, the 423.6% level, but the price again breaks through, and we lead to the most recent daily moves from last week and today, when we've made yet another open with a gap. So there you go, there are some examples, some real examples of how Fibonacci extension levels could have acted as support and resistance. In fact did act as support and resistance. Many of these levels we could have used to help guide trade entries and give us a guide to where we would like to see our profit targets go. For more videos, articles and trade ideas, please visit www.tradeinformed.com.